Hi, welcome back to the Unleashed Advisors YouTube channel. I'm Annie Nash with the Unleashed Advisors at eXp Realty, and today I'm here with Craig Nash, also with the Unleashed Advisors at eXp, and we're going to talk about the market conditions as of August 2023. So Craig, we get asked a lot when either we're talking to new people or we're talking to our clients, hey, what's the market like? And really that's a totally loaded question, right? So today I want to talk to you about that, if you don't mind.
Sure.
But first, so when somebody comes up to you and says, hey, Craig, what's the market like? How do you
Well, that
respond?
is a very loaded question, I tell them, because there's so many different aspects of the market. I mean, it's inventory, it's interest rates, it's how quick houses are selling. It could be even how well we are doing as realtors. So the first one I usually talk about is inventory levels. And I just pulled those numbers up this morning for Greenville. And those numbers in the Greenville MLS, there's 2493 homes for sale in the Greenville MLS. The average day on the market right now is 65 days. The average price is $504,000 is the average price of a home right now in the Greenville market. The median price range is $354,000. So that's a lot of information there to talk about. What do you think about the current level of, the current inventory?
Right. So, yeah, that's a lot of stuff that you've got right there. But so let's start with inventory. Yesterday, I was doing some research on Altos just to kind of see what does the current market look like with respect to inventory and how does it compare to previous years, months, looking back. So what I found was a graph all the way back to 2015, and it kind of shows inventory levels going up, inventory levels coming down. And so if you look, it's very cyclical, and every year looks almost the same. December is the lowest amount of inventory. Fewer people are trying to sell their house. Fewer people are buying houses, and so there's fewer on the market. But it's been that way all the way back to 2015 and further. But what you can see on the overall, so there's, the graph kind of goes, it peaks and then valleys. It peaks are like April through August, really. And then it starts going down. But overall, inventory levels have been going down slowly year after year. So you look at 2015, probably had the peak inventory. 2019, that graph really starts coming down, and you'd see it kind of peak back up. It kind of has some of the same shape where the low is in December. But then when you hit 2020, everything went crazy, right? So inventory levels just crashed, and they kept going down because it followed interest rates. Interest rates were going down, inventory was going down, and the market was insane. I mean, we both experienced that. And then they kept coming down, and then you see it start kind of hitting back the way that cyclical look was about mid-22. Mm-hmm. And what happened at that time? Interest rates started climbing back up. So you see inventory coming up. But what I learned was we are years away from being back to 2015 levels, between people wanting to sell their houses, but also new construction can't keep up with it.
Right.
So with that information, can you talk a little bit about how interest rates might be affecting inventory levels?
So, yeah, I mean, interest rates as they go up, and they are going up right now. They're over 7% right now, which we haven't seen for like
21 years.
21 years, which is crazy. So, but the thing about interest rates rising, you would think that the prices of houses would start to drop, but they haven't indicated that yet at all. Mm-hmm. And I'll give you an example of that. For the first quarter of 2023, it is up 10.7% over the first quarter of 2022. And even quarter over quarter, so the first quarter of 2023 is up 3.1% versus fourth quarter of 2022. So prices continue to go up as interest rates go up too. Mm-hmm. But the nice thing about that, though, is that a lot of people are kind of getting out of the buyer's market because interest rates are going up. So what happens is you have less competition right now for a house. So the houses are sitting a little longer. They use, a year ago, you might have a house sit on the market for 6 hours a day at most. You really had to buy the house really quick. Now there's, as I said, they're sitting there for 65 days on average in Greenville. So you got a little bit of time to actually go take a look at the house. You have few more houses to actually go look at because the inventory is coming up, and you have less competition for those houses. So it's really a good time to actually buy a house.
So how do you respond to buyers when they're worried because interest rates are high? We talked about it. We've hit a 21-year high of interest rates where we're over 7%, right? So how do you respond to somebody that's concerned about that?
So yeah, here's the issue with that. Even though the interest rates are high, you're still going to miss out on the equity of the home if you sit on the sidelines and wait. Prices are still going up, as I said. Even if they go up at a milder rate, as like an average rate of around 4%, maybe 3% a year, on a $320,000 home over 5 years, you're going to miss out on like $56,000 in equity.
Yeah. And you don't have to do anything for the equity.
You just have to sit there and let it grow. Mm-hmm. So that's the concern I have for people waiting on the sideline. You can marry the house, but date the rate. You can always refinance that rate later, especially if the rate starts to come down, do it, refinance it later. Now, I'm not telling you that if you have a 3% interest rate on a house now to go sell your house. Keep building that equity in it, so it eventually get to the point where you will be able to sell that house and get a good rate and move, make a move on up at a bigger house, or if you want to downsize or whatever it is.
But even if somebody has one of those lower rates because they've lived in the house for a while, they did the refi back in December of 21 or 20, and they got that 3%. If it's time to move, it's not a bad time to move.
No.
Because equity will build in your home because of yeah.
Yep. Equity is always a good thing to have. So.
Right.
What else would you say about today's market?
Today's market is actually, it's kind of a little bit more fun. I like to negotiate for my buyers.
Mm-hmm.
So being able to spend a little bit more time in there instead of like we saw in 21 where it was how much can I give you? How much can we bid to sellers, right? So now it's a little bit more balanced. Buyers get a little bit more flexibility with negotiating a realistic price. You can't go in there and ask for 50% of their asking price and expect to win the bid. But you can do some negotiating. You can, both sides come out of the deal with some things that they wanted, right?
Right. Negotiations back for the buyer now.
I love
so
it.
it's a good thing.
Yeah.
So
buyers and sellers both get a little bit of what they want.
Yeah. It's more of a win-win situation for both sides of the deal now versus, I felt pretty bad for buyers a couple of years ago just because it was just, never ending.
Yeah. But I still think it's not a bad time to get in the market.
No.
It's still a good time to buy a house because, like you had said, prices are continuing to rise. And what we're seeing, when interest rates go down, inventory is going to go down, and we're going to be in a similar situation as we were before.
We're going to be back in the madness, because the competition is going to be more. There's going to be more competition there for each house.
Yeah.
So, you're going to have that bidding war again. So.
Yeah. Well, thank you, Craig. Do you have anything else that you would like to add about the current market conditions for August of 2023?
No, I think we're pretty good. So,
right.
I think it's a great time to buy a house. So.
I do too. Great time to buy or sell.
Yep.
So if you're in the market in the Greenville area, I'm Annie and this is Craig. We are with the Unleashed Advisors at eXp Realty. We would love to help you out. Until next time, we'll see you around. And look out, world, we are unleashed.